You're out there buying SoFi at market value. I'm here selling puts, collecting premium, and getting in on SoFi at an even better price. Let me show you what I'm talking about. What is going on, premium chasers? I hope you are having a God blessed day today. Every single person that comments down below is going to get our rolling playbook, which as an option seller is a must-have skill in your arsenal. So drop a comment down below. I'll personally respond to you with that rolling playbook. And while you're down there, hit the like button, hit the subscribe button, and that notification bell. Guys, today I'm showing you how you can actually get into SoFi at a better price and collect a juicy premium up front as income from somebody called the Silly Little Options buyer. Let's go over the shoulder right now real quick to show you how this is done. I'm just using Robinhood as our example here, but you could do this with any brokerage out there. I'm going to go to Trade SoFi Options. I'm going to click Sell, Put, and I'm going to go out 33 days. What I'm saying here is in 33 days, I'm willing to buy 100 shares of SoFi for a price that I choose, okay? Now, what that price might be, let's just say for this example, we'll just do $12. So I'm going to, maybe buy 100 shares of SoFi in 33 days for $12. And for just saying maybe here, I'm collecting $45 in premium from an options buyer, right? This is called premium. This is actual income. This is actually putting your money into actually work for you, and this is given to you up front into your brokerage account, right? Some people like to look at this as lowering your cost basis for your shares if you get assigned, right? So let's kind of go full circle because I'm going to show you guys entry, exit points, how I like to structure things for myself. I like to keep things real simple here, guys. So if you like simple, you're at the right place, okay? So for example, right? I like to always toss everything into my cash secured put calculator, and it just gives you a high level overview of everything. So right now I'm collecting $45 in premium, right? That's $45. And obviously this is all educational example only, guys. These premiums are constantly changing. This is just what I'm seeing on my screen at the time of this recording, right? I'm going to have to lock up $1,200 of my collateral, right? Your brokerage isn't going to just let you say you could buy 100 shares of SoFi at 12. And if it actually hits 12 in 33 days, you're not able to buy them, right? So it's either going to use your margin or it's going to lock up that collateral, right? That $1,200. So 12 times 100 is 1,200, right? Simple math, right? I'm going to put my collateral right here, and you can see I'm getting a 3.75% return on my collateral. What is that number? Well, we are simply dividing the premium by the collateral, right? We often hear people say, "Hey, make your money work for you, money while you sleep," right? What does that actually mean, bro? What does that actually mean? Well, in my opinion, this is the only form I've seen. I've been doing online businesses for like 15 years, guys. Like I know this space in and out. Starting a business, that is not passive income. Like the only form of passive income that I've seen, especially over the last 7 years of selling options, right, is this. Like this is the only form I see where you could click a couple buttons and your collateral actually goes to work. Or if you do like a high yield savings account, right, you put that money and it pays out you monthly, or like treasury bills. Like those are all really the purest forms of passive income. This just takes it to a little bit of a further level because there's a little bit more risk involved, right? Because some of you are looking at this like, wow, Pete, a 3.75% return on my collateral in 1 month? That's awesome, right? That's fantastic. That sounds a little too good to be true, though, Pete. What are you not telling me, fam? I got you, right? There's a few things that can happen here, guys, and I want you guys to know all the risks so you can make educated financial decisions for yourself, not from YouTubers. You got to be able to walk on your 2 feet, baby, right? So first things first, right? 33 days from now rolls around. Now, some of you have asked me, Pete, well, what if it's $12 like 2-3 days after I do this contract? Will I be assigned? No, it's at the time of expiration, okay? So right here, we like to put 33 days. Why do we do 33 days? Well, we get a good mixture of premium return on our collateral as well as strike price. Let me show you, for example, here what I'm talking about. If I go just, let's say, 12 days out, right? This strike of $12 is only going to pay me $16. That's not a really great return in my opinion. So the further out you go in time, and time is an option seller's best friend, the better strike we're able to get, right? Potentially buying those 100 shares and getting a great premium return. So full circle, what can happen? In 33 days, if SoFi is trading at $12, you will be assigned. Your $1,200 will be taken from your account, and you will be given 100 shares of SoFi. Fantastic. You got it at a better price on a stock that you love, right? You got to make sure you love the stocks that you're investing and trading in, right? Common sense. Second thing that can happen is, let's say SoFi shoots to $15, it stays flat at $13, right? Well, your contract would expire worthless. When a contract expires worthless, that means your collateral that we locked up, that $1,200, will be returned back to you. It'll be returned back to you, and then you can find another opportunity to sell another put, collect more premium. Rinse and repeat, baby. If that sounds good to you, you are in the right place, guys, because that is what I talk about here every single day. This is a simple strategy. I don't trade a lot during the month, a few times here and there, but it scratches that little itch for me to be still involved in the market, so I still live my everyday life, right? So if you like that, you like the sound of that, make sure you watch some of the other content on the channel. But those are really the two things that can happen here, okay? Now, we'll go over a couple more advanced topics here in a second, but some of you might be thinking, well, Pete, like, how do I know which, like, share price to pick, right? Pete, like, there's a lot here. Like, it looks confusing. Like, why should I pick the 12? Why don't I do the 11.5s, right? Why don't I do the 11s? Well, this is all going to come down to your goals, your portfolio strategy, your risk tolerance levels, okay? For me, I like to typically be in a delta of 0.2 to 0.3. What does delta mean? Listen, open up your contracts, whatever brokerage you're using. You'll see a little Greek section called delta. People will complicate this so you don't understand it, and then you have to buy their $4,000 course. As option sellers, we look at this as a probability. Listen, some of you will argue with me about it. I literally don't care. Dude, I don't care. I'm not going to change my strategy because you argue with me in the comments, fam. I'm just showing you what's worked for me for the past 7 years. I literally am not going to, like, that's just what I do. I keep things simple for myself, and it's served me well, right? So with the delta is a 0.28, right? So this 0.28 basically means there's a 30% chance that SoFi will drop to 12 and you will be assigned. Okay, that's what that means. Okay, but there's a 70% chance that SoFi will stay above $12 and your contract will expire worthless. So I like to usually be between that 80-20 or 70-30, because at the end of the day, I don't mind being assigned, right? Because when I get assigned, I could do something called a covered call, which is a topic for another video, but that's where we can then say we'll sell our shares for a price that we choose, right? And collect more premium. If you want that, like, full strategy, there is a 30-minute training. You go watch it on, like, 2xp, first link in the description, or just dive into other content on the channel, guys. But you might be thinking, okay, Pete, well, what if I want to take it a step further? I hear a lot of people talking about, like, technicals and all that. And, like, dude, I'm not a technical guy. Like, I'm not sitting in front of my screen all day, like, drawing and all this nonsense, or signing up for, like, paid tools to tell me stuff. Listen, I don't do none of that. I don't pay for anything. Like, straight up, guys. Like, I used to be that guy. I was that guy that I would have all these, like, option screeners and all that stuff. And, like, at the end of the day, for me, I realized everything I do is all about longevity right now. Okay. Like, if I'm going to get involved in something, or I'm going to start something, it needs to be something that I'm willing to do for the rest of my life. So for example, if I started this channel, it's a topic I'm very passionate about, and it's something I love to do, and it's something I can trade and do for the rest of my life, because it doesn't require me to trade like 100 times a day, like day traders do, right? So, for example, right, let's go to Yahoo Finance. Right here is a basic charting. We're going to do basic technical analysis. You do not need to complicate this. A lot of people complicate this stuff. It's literally pointless, in my opinion. I don't know, guys. For me, I don't care if you beat me out by like 1 percentage point or 2%, even 5 percentage points a year, right? Your life is probably unenjoyable compared to mine, right? In the sense of you're having to be glued to your screen all the time, right? For me, I don't want to do that. Like, me personally, I'm not a trader like that. I don't want to be glued to my screen all day. I want to be able to, set my losses or my stops, whatever I got to do, and then just have everything kind of like automated for me, so I don't have to like be babying stuff. Okay, I can't stress. I got my 3rd kid on the way. Probably by the time this video gets posted, my son has probably been born. Like, I got other stuff to do, right? But so we'll go over to the chart section here on SoFi. And right here, what we are seeing is a couple indicators that I have. I'm going to delete them all so we can add them together, okay? Now, I'm going to give you guys if I can only pick one indicator to use, this would be the one. And I think that's all you need. I'm going to be honest with you. I think it's all you need. Everything else is kind of like it's all a fugazi anyway. Don't let anybody tell you, especially some teenager, when he sells you some Discord signals or something like that. Like, beyond me that some people pay for that crap. But regardless, you just need to think about yourself, right? Like, think what price, at the end of the day, all this matters is what price would you be cool owning SoFi at? Right? Because if you believe it and you love the company, then you know what? If 12 is like something you're like, you love it at, then that you don't need to go and do all these other crazy things. But with that said, there are right times and wrong times to do certain things, right? Just like anything in life, right? So for example, with SoFi, right, let's go to the indicators. I'm going to click Bollinger Bands here. I'm going to set this this period to 30, and you're going to see why here. Basically, this adds a little overlay. This is the only indicator you need, the Bollinger Bands, for the most part, right? If you want to take it to the next level, there's other things you can do, but for the most of you, and me especially, it's really like the only indicator I pay that much attention to, okay? So we could see SoFi's trading right around this middle Bollinger Band. What is the middle Bollinger Band? Well, that's that 30. That's that 30-day moving average that we set for the period when we added the Bollinger Band. This 1261 is the middle Bollinger Band area, okay? And the 13 is where we are currently trading at. When we are trading towards the bottom Bollinger Band, right, like you see, like where we're in early April, this was the best time to do cash secured puts. Why was this a great time to do cash secured puts? Well, when a stock is plummeting, people are just selling off on this thing, right? They don't want it anymore, right? Whatever, like bad news, right? America's collapsing, and they're just getting rid of it. You could see SoFi dropped down to like 947 here, okay? Now, at that point, if you looked at the chain, right, you would have saw the $8 puts, right? The $7 puts paying out incredible premiums, right? But look at them now. We're going 33 days out, and look at the 8s. You're not getting anything. For the 7s, you're not getting anything. Like literally nothing. We might have to go out. Like if I go out, let's say 300, or let's just say 299 days, 300 days, maybe at that point I'd collect something, right? For like the 8s, I'll collect $57 in premium. But that locks up your collateral for 300 days, which in my opinion, there's times and places for everything, but in my opinion, that is not a good strategy, right? But that is why usually when we're trending towards the bottom Bollinger Band, right, that's the best time to open up your cash secured because you're getting a great premium and you're getting a better strike price if assignment does occur to you. And what we've seen here, guys, is when SoFi hits this bottom Bollinger Band, it usually kind of comes back to reality, right? Now, we don't necessarily ever know, right, like what a stock is going to do. Don't let anybody ever tell you what a stock's going to do. Sometimes it plummets way below that bottom Bollinger Band, but it does usually recover into that range, okay? So this is the indicator that I love to use when I'm setting up my cash secured puts. Usually I'll look at like a 3-month chart for me and the 1-month chart. Most of the time, just a 3-month. I'll flip between them all, honestly, but usually 3-month and 1 month is all I care about because I'm usually, again, doing my expirations 30 to 45 days, right? So how do we know when to, manage this? Like, what is the management of this, Pete? Well, first things first, let's say you did do these 12s, right, that you collected for $45. A lot of people in our community, what they do is they'll open this up, put your phone in your pocket, live your life for 33 days. Live your life. Go whatever you want to do. The sky's the limit, man. You just collected $45 in premium. Go spend it how you want. Go live it up, bro. But in all seriousness, a lot of people do that, and there's nothing wrong with that. I honestly, if you're just getting started, I would just say do that, honestly, just so you can kind of see how this whole process looks like, right? You're not doing anything. Now, a lot of people that are more advanced, and I know there's a lot of you that are more advanced that are you want to be a little bit more active. You're just trying to squeeze every single drop of that juice, right, and free up your collateral, etc. What you can do is you can close your positions out early, right? You can also roll them out, basically the same thing. People will complicate rolling to infinity and beyond, and obviously the rolling playbook will be given to every single one of you down below. So just drop a comment. I'll personally reply to you. So let's go over to our calculator. Oh, all these calculators I forgot to mention are free. Everything's here free, guys, unless you want one-on-one attention with me. But everything's free here in our Facebook group. All these calculators, all this stuff is free for you. So just go ahead and join our Facebook group. Introduce yourself. It's a vibe in there, okay? So that link will be in the description. So what I like to do if I'm going to consider closing my position early is I will, and let's just put our expiration date, and you'll see why I like to put my expiration dates here, because it gives me my annual return. Obviously, we're not going to, I just like to see this as a high level overview. It doesn't mean you're going to be able to do this trade 11 times exactly the same because these numbers are constantly changing. But you'll see here exactly why I like to look at that annual return at a high level, okay? So let's say you just opened this trade, $12 put on SoFi. All right, and you go live your life for 2 weeks. And you're like, you know what? Didn't I have a put on SoFi or something like that? Oh man, I'm like on my lunch break. All right, let me go take a look. All right, you open up your phone. You're like, whoa, what the heck? SoFi's at like $15, right? This is crazy, right? What do you do with that? Okay, well, if SoFi jumped up to like $15, obviously this is an educational example only, your put, because it's a $12 put, will start becoming worthless. It'll actually become a lot more worthless as time goes on. And what you can actually do is something called buying to close your position, or just honestly just called closing your position early. Okay, so now you can't just go and close your position just because you want to. You actually have to pay a little bit of money to close that position out. So in this example, let's say with SoFi, 2 weeks goes by, and you could see in your contract that, hey, for if I give back $10, if I pay $10 of my $45 that I collected, I can actually close my position out early. Okay, that's interesting. So I'll only net $35 in premium, but I cut my expiration time in half. It's 14 days now. All right. And so my return is a 2.92% premium return, right? The 35 divided by 1,200. I close out my position. Now I get my collateral back early, basically 2 weeks early, over 14 days early. I can go run the play on another stock, and collect more return. Okay, should I do this? Should I not? I don't know, Pete. What do you think? Well, in my opinion, I would do this trade personally. All right, you have to go make your own decisions. This is all for educational purposes, right? But for me, I usually like to be in that 1 to 3% target range. Okay, 1 to 3% premium return. Okay, if I can get there quickly and free up my collateral and lock it in, I'm gonna take it. Right, I'm gonna take it. I'm gonna close it up, and this is right there on the high end, right? And I can free up my collateral for another opportunity. I will do that, right? And I'll often look at that like, hey, look on this annual return side. So for example, let's say, you look on your phone and you're like, okay, still trading sideways or whatever, or it hits $15, but it's like, let's say 30 days, right? You still have 3 days left on your contract, right? And they're asking you for $10 back for 3 days. In this case, let me know what you think. Would you close your position out 3 days early, right, for $10? In this case, for me, I most likely wouldn't. I would just wait it out for 3 days. Why? Because this is where I kind of just look at a high-level overview of my annual return. And secondly, I like the stock, right? Now, unless I have like something going on that week where something might be happening in earnings, or there's something I'm just worried about, you get a gut feeling about this stuff too, guys. Like, and you'll build that up over time, right? You'll kind of learn your style of trading, and you'll become better, and you'll kind of figure out your own strategy. But in this case, I would just let it go so I can collect the full premium. Guys, if you want the full rolling playbook, make sure to drop a comment down below. I'll personally respond to you with that ebook. You definitely want to read that, especially if you're getting into selling options. Also, those of you that are interested in a more hands-on approach, that we do have a 1-year-long incubator program that you might want to check out. Click the link in the description of today's video. There's a 30-minute class there, shows you exactly what selling options and the quad option strategy is all about. And if you want to take it another step further, working a lot closer with me over a course of a year, you'll be able to book a call with us, and we can make sure that it's a good fit for us to work together. But guys, remember, sell options, collect premiums, repeat. I'll see y'all tomorrow.